All right, let's look at some questions related to payroll liabilities. We'll probably break this section on payroll liabilities down into a couple of videos because there are a lot of calculations that we have to look at. Um, so bear with me while I get this calculator ready here. Let's see here. Let's move that down. Okay. So we're right here. We're right here. By the way, if you are in one of my classes and you're wondering what is this 1221, if you thought it referenced like December the 21st or something like that, it does not. What we do is the questions that come after this uh, can be found on the PowerPoint presentation between slides 12 and 21. So the first video that we made for liabilities wasn't numbered, but it would have been slides 1 through 11. Those questions would have pertained to slides 1 through 11. These questions pertain to slides 12 through 21. Okay, let's see what we got here. It says, proper payroll accounting methods are important for a business for all the reasons below except. Okay, so we've talked about how important it is to be accurate and timely. This is nothing new. So let's look here. It says, proper payroll accounting methods are important for a business for all of the reasons below except. So that means 3 of these are true. Good employee morale requires timely and accurate payroll payments. Well, that is a true statement. Therefore, it is not the right answer. Payroll is subject to various federal and state regulations. Sounds good to me. Therefore, it's not the right answer. C, to help a business with cash flow problems by delayed payments of payroll taxes to federal and state agencies. Okay, well, we are actually getting a little bit of a benefit if we consider the time value of money. You know, we have a little bit of time to pay these, but this is not why we want to have proper payroll accounting methods. Okay, this is a very minor benefit. D, it says payroll and related payroll taxes have a significant effect on the net income of most businesses. And it says most businesses. I would say the only businesses that it does not have a major impact on are businesses that don't have employees. So A, B, and D are true. That makes C the correct answer. All right. So Thomas Martin receives an hourly wage rate of $40, okay, with time and a half for all hours worked in excess of 40 hours per week. Payroll data for the current week are as follows. Hours worked, 48. Federal income tax withheld, $350. Social Security tax, 6%, which is not the correct rate, but whatever. And Medicare tax rate, 1.5%, also not the correct rate, but that's okay. Let's look at what the question says. It says, what is the gross pay for Martin? Okay, what is his gross pay? Well, the first thing we're going to do is we're going to take his $40 per hour that he makes, and we're going to multiply that times the relevant number of hours, which in this case is 40. And we're also going to consider, it says here that he gets time and a half for all hours over 40. Well, he worked 48. So if we were to take, I'm going to do this over here, if we were to take 40 and multiply by 1.5, we would get 60. So what that means is that for 8 of these hours, 48 minus 40, he's going to get paid $60. Okay? So we'll go ahead. We don't really need to use our calculator here, but we'll do it anyway. 40, well, let's see, let me make sure you can see what I'm doing. 40 times 40 equals 1,600. Okay? So let's just go ahead and write that. Where am I at? Right here, $1,600. Okay, clear that out. And then $60 times $8 equals $480. If we add to the 480 our original 1,600, we get 2,080. Now, I'm going to clear this out, and I'm going to get rid of this. And I want to teach you a little lesson here. And this is a lesson in reading the question and making sure that we don't use numbers that we don't need. The question asks for gross pay. We're finished. This is the answer. We don't have to consider the federal income tax withheld, or any Social Security withholdings, or any Medicare tax withholdings, or, quite frankly, any other type of withholdings that might have been thrown into this question, because the question asks for gross pay. This is a situation, now your accounting teacher may not do this to you, or if it's me, he might, but you are going to want to read this question. Remember, you're taking an exam, you're kind of nervous and everything. You might want to read this as net pay, or you might start seeing all these deductions and you might not even read the actual question. So make sure that you pay attention. Okay? All right. Let's see what we have here. It says the following totals for the month of June were taken from the payroll register of Acorn Company. We've got salaries expense, $14,000. And then we have Social Security and Medicare taxes withheld, total $1,050. I'm going to trust them on the math. Income taxes withheld, $2,600. And then retirement savings, okay, retirement savings are $1,000. And what we're going to assume here is that these retirement savings are deducted from gross pay. In other words, this is not any kind of an extra benefit that the employee gets. That $1,000 is what we call deferred income. Goes into a retirement plan out of the employee's gross pay. So let's make this a little bit smaller and just see what we have here. Looks like we have, let's see if we can move this a little bit more. Looks like we have the salaries expense, $14,000. This $14,000 is equivalent to gross pay. We have Social Security. So we're going to start here at $14,000. That's our gross pay. $14,000 is our gross pay. And we're going to subtract from that $1,050. Okay, for the Social Security and Medicare. We're also going to subtract income taxes withheld. And finally, we're going to subtract $1,000 for the employee portion of the retirement savings. And that gives us $93,050. Okay, we're going to move that out of the way. And so what that tells us is this figure here, if we were to put a subtraction sign right there, would be $93.50. So, which one of these journal entries would be included? It says A, debit to salaries payable for $14,000. Well, that's not correct for a couple of reasons. Number one, it would be a credit, and number two, the amount is right. Okay, so that's not right. Let's back up here. It says the entry to record the payment of net pay would include so a debit to salaries payable for $14,000. the debit part actually is correct, but the figure by itself is wrong. So choice B says debit to salaries payable for $93.50. Okay, that's going to be our correct answer. A credit to salaries expense for $93.50. We've already recorded our salaries expense, and we did that for the full $14,000, and we certainly didn't try to use a credit. And then a credit to salaries payable for $93.50. The reason that D is wrong is because this is asking us to record the actual payment. Not when, this is what we did here in choice D. This is when we set up the liability itself. Okay, so the actual payment would include a debit to salaries payable for $93.50 because we had to get rid of this liability that we set up in the first place. Okay, so B is our correct answer. All right, let's end this video, and we'll have another short video for payroll liabilities coming up next.